Welcome everyone, bienvenidos. Thank you for joining today's session on crypto regulatory policy in the US. As many of you know, today's special guest is Edward Nasti, who joins from the US. So we'll be speaking mostly in English. Before we begin, quiero invitar a todos nuestros asistentes a prepararse para la Ledger Leaders Week, que tendrá lugar del 19 al 23 de mayo en la Ciudad de México. Un evento para construir juntos el futuro de la industria blockchain, cripto y Web3, con una semana completa de meetups, talleres, conferencias, galerías, workshops y todo tipo de experiencias inmersivas que concluirán en un evento principal y una fiesta exclusiva para asistentes. Y como saben, los boletos ya están a la venta y este 28 de febrero pasan a la siguiente etapa de precio, así que aprovechen para comprar el suyo mientras están en su precio inicial. And in the interest of time and honoring the time here that Edward is sharing with us, let's get started. First, I want to introduce our guest today, Edward Nasti, Vice President and Head of Legal from Alpaca. Welcome, Edward. It's great to have you here. Thank you for joining us.
Oh, thank you for having me. It's a pleasure, and thanks for everyone that's joined this morning. It's a pleasure to speak on this panel today. And good morning, good afternoon, good evening to everyone that's joined. So I'll just start, and to get it out of the way, a quick disclaimer. As all lawyers know, my comments and opinions today are my own and not that of my employer, nor should they be construed as legal advice on any specific set of facts or circumstances. So I'll just give a little background on myself. I'm a technology lawyer who's been working in the financial services and tech industries for the last decade. As you were just told, I'm currently Vice President, Head of Legal at Alpaca, where I've been for the last 3 years. At Alpaca, I manage the legal team responsible for all U.S. and global legal matters, and I advise our executive team and our board of directors on legal and regulatory strategy. Prior to Alpaca, I was in private practice at a large New York law firm, Schulte, Roth & Zabel. And earlier in my career, I was in-house counsel at both DXC Technology and before that, AIG.
That's awesome, Edward. Thank you for sharing that. All right, so can you now give us just a brief overview of Alpaca and what do you guys do and the services or products that you offer, particularly those relevant to the crypto industry?
Sure, absolutely. I think this is a great panel, to introduce Alpaca. So what is Alpaca? We're a brokerage infrastructure fintech company, global fintech company that allows businesses and individuals to access stocks, ETFs, options, and the topic of today, crypto trading through our APIs. So we've built proprietary technology, and we've obtained broker-dealer licenses in the United States, in Japan, in the Bahamas, and on the crypto side, we hold crypto licenses in the United States. So we're a registered money services business, registered with FinCEN, and we also hold multiple state money transmitter licenses, in the United States. We are also licensed in the Bahamas as a digital asset, business there. And building there in the Bahamas as well. So our clients can use our APIs for trading crypto or other assets directly with Alpaca, and other use cases are to use Alpaca to launch apps and build on top of our brokerage infrastructure. So we really serve both individuals, businesses that are either looking to trade or add investing to their offering.
Yeah, on that note, I'd like to ask which types of clients do you usually serve? Like specifically, which types of clients do you work with? And most importantly, do you serve clients in Latin America?
Yeah, so we have both a direct-to-consumer and a B2B2C offering. So you have a really diverse offering depending on what you're looking to do. And to answer your question, who we serve. So Alpaca's mission is to open financial services to everyone on the planet. So as part of that, we actively work with partners and clients throughout Latin America, subject obviously to local regulations. So we're seeing some really interesting use cases out of Latam recently, especially with the recent changes in the U.S. policy, the topic of today. So it's definitely an exciting time. I tell everybody to check out our website at alpaca.markets and reach out to us if you're interested in learning more.
Great, thank you. So before we move in, I'd like to also welcome my co-host, a friend and partner, Jorge Tavares, founder of Legal and Compliance Advisors. Jorge, always a pleasure to share this session with you. Bienvenido.
Thank you, Zach. Good to be here. Thanks.
Now, mi querido Jorge, why don't you do the honors?
Sure, thanks. Edward, we talk about it's the best time to be a crypto lawyer, right? And thank you to be here, Edward. Let's talk about the general sentiment in the US regarding Trump's upcoming crypto policies. Before get into details, who will be describe the current mood or feeling in the industry? Are people excited or perhaps worried, or would you say there is some level of uncertainty about the direction things we will take?
Yeah, it's a great question. I think it's a lot easier to answer that question today than maybe a year or 2 years ago. And it's really great timing to have this panel. Just this morning, a big announcement in crypto that Coinbase, has won their case, and that the SEC is going to dismiss the enforcement case against Coinbase. So huge victory. So I'd say sentiment, at least this morning and generally, is very high. It's extremely high. Let me start out by saying we're going from in the U.S. a prior administration that I would say was viewed by most people as very anti-crypto to now the most pro-crypto federal government ever at all levels in the U.S. So it's a huge change. It's a huge shift in sentiment. I think there's a lot of optimism and excitement. I think that there's excitement about crypto regulation. It's a very interesting, exciting time. I think there's less concern really among market participants, and it's more about an emphasis on opportunity to shape and influence what the legislation and policy looks like moving forward. I think that there's, the ability to really work closely with regulators and with Congress to shape that guidance and regulation moving forward. And it's really a shift, I'd say, from past efforts in the crypto industry under the previous administration, where there was some progress on bills, right? For example, stable coins, market structure acts, but ultimately, they didn't materialize. They didn't make it. And I think back then, I would say there was a general expectation that the proposals at that time weren't going to be implemented. They, weren't going to be successful. But now it's a huge shift. There's a lot of optimism, and the reality is that there's going to be progress moving forward. But with that, there's a lot of work that remains, right? The Trump administration, there's a huge pro-crypto focus to establish the United States as a leading market for crypto innovation. So where do you start, doing that? And, in my opinion, you have to have regulatory clarity, which we've lacked for years. So you do that by creating clear guidelines for digital asset issuers, for financial institutions and other participants in the industry. You also create investor protection and oversight, as part of that. And I think really, the biggest thing is encouraging innovation and supporting that technology innovation while, putting the guardrails in place to mitigate any risks, whether it's bad actors or others in the market. So, if you ask me personally, I think President Trump is really sending a message to builders: come build crypto in the United States. We want you here. So it's a great time. It's exciting. I like to say with the U.S. policy shifts right now, it's like drinking from the fire hose. There's just rapid and extensive changes right now. It's occurring at an unprecedented pace and volume. It's remarkable. I mean, we're talking about, we're just 1 month into the Trump administration, and we're already seeing a lot of change. We're seeing a coordinated White House effort to really position the U.S. as a global crypto leader, and it's encapsulated in the January 2025 executive order. So where does that leave us today? We're looking at these new proposals, whether it's legislative or in the form of bills. They're very likely, I would say, to pass. So I think it's a critical time for both the industry and for lawmakers to really scrutinize the specific text of these proposals and think about, do they appropriately cover emerging technologies? Do they inadvertently hinder innovation? And really contemplate that, because it'll really shape how things move forward. And, for businesses and participants in the industry, I think questions to consider are, how will these bills impact our business? How will the regulations apply to us? So these are things that are top of mind for myself at Alpaca and, I'm sure others in the industry.
That's interesting. I heard so many terms that I like to hear: optimism, huge shift, innovation, regulatory clarity. That's what everyone, I think, not just in the US, we're waiting for the crypto industry. Thanks, Edward, for sharing that. I'd like to just give a brief overview on what the executive order that you were referring to generally speaks about. This will only take a minute, and I'm going to address. Jose Angel has already posted a question, which I think is really interesting. That says, the executive order does not mention explicitly Web3. Is that a blank check in favor of the Web3 movement? Thank you, Jose, for posting that. We will circle back on that after we just give everyone a brief overview on what the executive order states. So first, we know it as the executive order, but it has a very technical and non-sexy name, which is Strengthening American Leadership in Digital Financial Technology. It was issued on January 23, as Edward mentioned. Just a quick overview. It states the support for digital assets and blockchain. It promotes the use of public blockchains, the development of software. It enables and authorizes mining and validation activities, and also authorizes self-custody, which I think it's cute because you don't need to authorize something that people can do on themselves without any sort of liability. But it's just interesting to see that in writing. So the second thing, it promotes the US dollar sovereignty. It's on a two-pronged way. First, promoting the growth of US-backed stablecoins and prohibiting CBDCs. That's very interesting. As long as the executive order is in force, no CBDCs will be issued in the US or used in the US. And then it undertakes to create jurisdictional and regulatory boundaries, which is something that I think was really needed in the industry. And then something that I personally think it was interesting was the revocation of Biden's executive order 14067. The name of this executive order was Ensuring Responsible Development of Digital Assets, and it stated some things about consumer protection, disabling illicit activities, and promoting international cooperation. The evaluation of a potential US CBDC, that's not happening anymore. And at least reading the Trump's executive order, and then addressing climate change because of the mining activities and that sort of thing. Most of these bullet points, we know why it was revoked now, but just mentioning it there. And the formation of a working group, which is going to be led, or is currently being led, by David Sachs, the AI and crypto czar, a position that's very, very interesting to hold. And the creation of a national digital assets stockpile. First, we thought this was the crypto reserve. It isn't, but we'll just monitor on how things move on the creation of a crypto reserve. So, and now, just after this brief overview, Jorge, I'm going to pass the ball to you so that you can focus on what we think are the most important topics to discuss here. So the mic is all yours.
Yeah, thank you, Zach. Edward, your experience is amazing, and we love to hear your thoughts on two major topics in the executive order: stablecoins and jurisdictional boundaries. Let's start with stablecoins. Please, can you give us a brief overview of how stablecoins are currently regulated in the US?
Yeah, sure. Stablecoins, it's a hot topic right now. There's a lot of conversation around it. So I think it's a good place to start and maybe take a step back at a very high level. talk about what are stablecoins, and stablecoins are a class of cryptocurrency, right, pegged to a stable value such as the U.S. dollar. So this means for every stablecoin that's issued, there's usually an equal amount of real-world assets and reserve to back that up. So a stablecoin issuer will accept dollars to mint or create new stablecoins and then holds the reserves. And then the issuer will also be responsible for burning the stablecoins, removing them from the available supply whenever a customer redeems the stablecoin for fiat. So, to answer the question, it's a very difficult, I'd say, with the current landscape, it's a very difficult question. Quite honestly, I don't think we have enough time to answer. But right now, today, you'd see in most cases, U.S. stablecoin issuers are either trust companies, right, like Paxos, for example, or they're entities that hold money transmitter licenses through states and work with bank custodians to secure the collateral backing the stablecoins. So right now, it's a very complex, I'd say. It's not an ideal landscape for market participants because it involves multiple agencies at the state and federal level. So it just is very rocky, landscape for any market participant to navigate through. And I think that brings us kind of to the next topic, or looking forward at what's going on today with the policy changes. So George, maybe we want to talk about the recent proposals.
Okay.
Sure.
Thank you, Edward. It's very useful and interesting. Sorry, Isaac.
Just stepping on what Edward just said, the recent proposals, because and later we can discuss the areas of opportunity that we have here. But Jorge, I'm gonna steal the mic just for a minute to discuss one of the proposals that are out there, which is the Genius Act, right? This was recently issued and proposed by Senator Hagerty, Cynthia Loomis, aka Crypto Mom, and Tim Scott, among others. Can you just give us your thoughts on this Genius Act? Nothing too specific, of course.
Yeah, absolutely. I mean, it's a heavy act, right? So it's hard, but I'll do my best to kind of hit the key points that I see at least. So the Genius Act, right, as you said, was introduced in February, has bipartisan support, which is very big, I'd say, in the U.S. So the Genius Act really is aiming to establish a federal licensing and supervisory framework for payment stablecoins. So it's looking to balance both the federal and state oversight, while also promoting the innovation, promoting consumer protection. So one of the things that it defines is that stablecoin issuers they either must be a subsidiary of an insured depository institution, they must be a federal qualified non-bank payment stablecoin issuer, or they must be a state qualified payment stablecoin issuer. So, how does that break down, right? It provides two regulatory paths, I'd say. You can look at the large issuers with over $10 billion in market capitalization as defined by the Act, would be regulated by the Federal Reserve and the OCC, while smaller issuers could opt for state level regulation with really, what looks like limited federal oversight, provided that the state regulation is substantially similar and satisfies certain federal standards. So, in terms of areas of opportunity, I think having that, that dual pathway really opens up opportunity, not just for the large market players, but for smaller market players, and creates a lot of opportunity for innovation. And just to talk through some of the key points and takeaways from the Act, from the Genius Act, it mandates strict one-to-one reserves, right? So all issuers must back their stable coins with either U.S. currency, demand deposits, short-term T-bills, so that it ensures that each digital dollar is redeemable on demand. Stablecoin issuers must also segregate the reserves from their operational funds, avoid rehypothecation, complete monthly certifications, attesting to sufficiency of reserves, and also satisfy certain capital and liquidity requirements. So, that outlines just, some of it. I'd say one key point for me, at least, and there's a lot that we could talk about, is the Genius Act also prohibits algorithmic stablecoins, which I think is very important. It's a huge takeaway. And it bans these unbacked stable coins, and hopefully it prevents a repeat of the Terra Luna collapse that was really a bad mark on the industry in 2022. And there's a little more about the Genius Act. It imposes customer protection standards on stablecoin custodians as well, and establishes rules around supervision and regulation, segregation of funds, commingling prohibition standards, monthly audit reports on fiat reserves, and I think most importantly in today's world, enhanced cybersecurity measures against hacks and fraud. A key area I think for the crypto industry. So it's a very I think ambitious but exciting for the participants in the market act, and we're hoping that we see more momentum behind it.
That's great, Edward. Thank you. There's actually a question here posted by Carlos, which I think refers to what you're discussing right now. We can discuss this right now or at the Q&A section. I think it would be best to discuss on the Q&A section, but I would just let you know that there's a question directly related to what you just mentioned, which is Carlos is asking how would DeFi protocol created stable coins would be treated, just such as DAI or other over collateralized stable coins, but that's DeFi issued stable coins. We can discuss that on the Q&A section. Carlos, thanks for posting. We'll address that at the end of the session.
Yeah, that's a good question. And just maybe to close out on the Genius Act, right? For myself, I'd say, and looking at it from a business perspective, I see right now currently there's this regulatory conundrum, and there's a need for regulatory consistency, because for me the main issue isn't necessarily choosing between a state or federal regulator, or whether it's the OCC or the Fed as best suited, right, to govern stable coins. Rather, it's ensuring that all entities, whether you're operating as a bank, as a trust company, as a money transmitter, making sure that they're regulated consistently. So for example, right, an entity right now that's looking to, approach the market could be looking at two paths. They might look at the trust company path, which is quite lengthy and it takes, good amount of time. But once you're approved, it allows for a nationwide operation in the United States. Conversely, you could look at the money transmitter approach, which really allows for companies to have quicker market entry on a state-by-state basis, but then you raise the concern about, operating in states where you don't have a license, and creates a lot of compliance concerns, I'd say. So it's really, these inconsistent regulations that exist today that are forcing businesses, in my mind, to choose typically the fastest route to market rather than the best long-term solution for themselves. And what we need to see, and what the hope is with the Genius Act and other regulation, is that there will be a clear legislative roadmap that ensures consistent rules for the same service regardless of the regulatory path. So I think that those are kind of the critical issues that I see.
That's great, Edward. Thank you. Very, very insightful. I think we want to keep this brief. We want to keep this under 30 minutes, and then perhaps have a 10-minute Q&A section. Thank you. As you mentioned, we could stay on one of these topics for half an hour, 1 hour, but we need to move forward.
Yeah.
And the second topic would be just jurisdictional boundaries. We just want to hear your thoughts, your general thoughts on these regulatory clarity that the executive order is proposing when dealing with the creation of a framework that identifies the jurisdictional and regulatory boundaries between agencies. Correct me if I'm wrong, but one of the key regulatory challenges the US faced was this distinction, right, between commodities and securities, and the CFTC and the SEC.
Yeah, it's definitely been, a historical tension between the SEC and the CFTC, and this, jurisdictional battle over securities versus commodities. And, I'd say right now it's this topic is in a really great position because with the recent appointments, I'd say at the SEC and at the CFTC, right? Incoming SEC Chair Paul Atkins, very big in crypto and digital asset space. He served as a strategic advisor for the Digital Chamber in Washington, D.C. He's known for strong pro-business and pro-crypto stances. The SEC commissioners under him, Hester Peirce, Crypto Mom, and Mark Ueda, they both served as his counsel during his tenure as SEC commissioner in the late 2000s. So the close association with Atkins will really position them as his acolytes and kind of carrying forward his philosophy on regulation, and they'll be expected to align very closely with his views. And we're already seeing SEC support for crypto initiatives, right? Through the crypto task force, other crypto-friendly measures, pullback on enforcement actions like we talked about, with Coinbase earlier this morning. It's a very positive for the crypto industry, and seeing kind of this consistent pro-crypto direction for the SEC. And then talking about the CFTC, acting chairman Caroline Pham and incoming chairman Quintens, they're both very influential voices, I'd say, on crypto, and they're viewed, in my opinion, very positively. I think that they have a very balanced but innovative regulatory stance at the CFTC. So they're both great advocates, and I think really positive for the crypto industry. And we're in a very unique time right now because historically, the SEC and the CFTC have been at odds, right? And that's really rooted in their oversight committees, since the inception of the agencies. But today, what's extremely unique, and for the first time, I'd say in probably most people's lifetimes, both agencies and their overseeing congressional committees are coordinating closely and working together rather than competing for power, or fighting. So we're going to see a collaborative approach between them that will hopefully result in unified regulatory standards for crypto assets and less uncertainty around this whole jurisdictional battle. So I think in the interest of time, I think we'll expect a harmonized regulatory environment, between the SEC and the CFTC, and it's a very positive shift for the crypto industry.
Yeah, and you say, Edward, working together, that is the most important thing, right?
Absolutely.
Absolutely. As we promised, our audience is great to talk about the US, but most of the professionals that are with us today come from Latam, which are very different regulatory framework. With the exception of Salvador, that is a new exception, most regulations in the region focus primarily of anti-money laundering, rather than operational standards or licensing requirements. In that context, what should Latin America users expect when dealing with US-regulated virtual asset service providers? Or do you think they will receive the same protection as US-based users?
Yeah, it's a good question. I'd say it's a difficult question to answer. It's probably very fact dependent, right? But in general, in my opinion, Latin American users should receive the same federal law protections as US citizens to the extent that there's protections that exist, right? The way that at Alpaca that I look at it, as a US firm that's expanding globally, usually our main focus is ensuring that we're properly registered or, working within the local standards and regulations, wherever applicable. But at Alpaca, under our policies, all customers are treated equally, regardless of whether they're a U.S. citizen or a non-U.S. citizen, and it's very important to our operations. So, I don't know if that fully answers the question, but from my experience, and I'd love to hear your thoughts, from both of you on what you've seen.
Great, thanks, Edward. And now we believe that some Latam virtual asset service provider may consider relocating in the United States for this regulation framework more attractive. How do you think the US should approach these incoming virtual asset service providers? Should they require a physical presence or US-based entity?
It's another good question. It's an exciting time. I think what we're seeing is there's a lot of shift towards a U.S.-centric approach. So, I think ideally there's U.S.-based operations if, you're a foreign builder or company or provider that's looking to enter the U.S. and, taking a step back, right, for Latam or really any non-U.S. business evaluating the U.S. market. I think the key is understanding the U.S. nexus rules and how they apply. It's really not just about having an entity based in the U.S., but the U.S. really broadly interprets interstate commerce. So you want to think about, your product offerings, whether, they have interactions with U.S. persons, whether, they're U.S. products, and, what touch points might trigger U.S. regulations. So, while there's a lot of positive momentum, I wouldn't say the floodgates are fully open. So it's very important, I would say, to have a practical approach and work with your legal and compliance teams, as you look to build and expand into the U.S. market.
That's great, Edward. Thank you so much for sharing such insightful comments and thoughts. Before we're just about to wrap up, is there anything you'd like to add before closing and opening the Q&A? Is there something that you missed?
There's so much to talk about, right?
Yes.
But I think just on the theme of LATAM and just the shift, I think what we'll see with the changes in policy in the U.S., it's going to be improved access to U.S. markets, providing flexibility for cross-border expansion, and really, I think it's going to establish standards that even non-U.S. nations could potentially mirror to foster their own local policies for a pro-crypto industry.
That's great. Just also before moving forward, where can people reach you if they have more questions or want to connect?
Sure. Reach out to me at Alpaca, Edward.Nasti at alpaca.markets. I'm happy to take the conversation from there and answer any questions that we don't get to today. A lot of the questions that I think that will come up are not the easiest to answer. Probably you have to go to the common lawyer. It depends. But happy to have these are great conversations. Love to have them. On follow-up calls in person. So yeah, please feel free to reach out or contact me through LinkedIn as well.
Great. Thank you, Edward. So let's just open the floor for the Q&A session. Just a brief 5 minutes. So please feel free to submit the questions through the activities icon at the bottom right corner. We have received some questions. Thank you for posting them. Let's just address some of these questions. Jose Angel at the beginning of the session asked, the executive order does not mention explicitly Web3. Is this a blank check in favor of the Web3 movement? Just Edward, if you allow me to just give my comments. I think Web3. The concept of Web3 is the extension of the internet generally using blockchain, right? So when the executive order addresses and invites users to use public blockchains and self-custody and that sort of thing, it is indirectly speaking to the Web3 movement. So I wouldn't call it a blank check, but I would say that it is included in the executive order when the executive order talks about blockchain and self-custody. I don't know if Jorge or Edward want to add something to that.
Yeah, I think you answered that perfectly.
Great. We have a question that is not directly related to what we're talking, but an interesting topic indeed. What happened in Argentina with Javier Milei and the Libra collapse or rug pull? We don't know. I think just my thoughts on this are that's why we're pushing for consumer protection legislation, right? To avoid these type of things, to specifically address rug pulls and the promotion of tokens, which is something that Gary Gensler weirdly promoted a lot or protected a lot. But it's interesting to see where things will be moving on that arena.
Yeah, I agree. In a different regime under Gensler, I think that there would be more in place to prevent this. And I think that that's ultimately, where we're heading. It'll take time, right? It might take months, maybe even years to put those frameworks in place. But I think that that's, where you want to try to reduce these bad actors in the space that really bring a bad name, bad reputation, and they're extracting value from the industry. And yeah, I think it needs to be a collaborative approach, not just, in the US, but, through all countries, and, building the right frameworks and putting them in place.
And I think that we are going to see more regulation related to advertising or marketing, right?
Yeah. One last question that we have here regarding CBDCs. Jose is asking, the prohibition to operate CBDC is surely aimed against China, but how can this prohibition be enforced in reality, given the distributed nature of crypto transactions? Comments on this?
Yeah, I think that that's a deep philosophical question, right? And it goes to the root of what crypto stands for. And I think that there's certainly political aspirations and influences there as well, right, for the U.S. to maintain, the dominancy of the U.S. dollar. So, yeah, I think it's a tough question to answer. I don't think that there's, easy or, right answer on that. It's, something that I think will be battled in the years coming, and we'll see how it evolves.
Sure. Thank you, Edward. We have other questions, but unfortunately we're running out of time. Just wrapping this up before we finish, a quick reminder for everyone. Tickets for Ledger Leaders Week are now on sale, and as promised, today only, we're offering a 50% discount on the current price. You can use the code shown on the screen to claim your discount. Go to foroblockchain.com, click on ticket, and then purchase, use this code, and then an automatic discount will be applied to your purchase. So it's only valid today. Even if you see this recording later on, it won't be there anymore. So, all right. So that concludes our session. Edward, thank you very much for joining us. It was truly an honor. It was a pleasure speaking with you. Thank you, everyone who attended today. And thank you.
Thank you you all for connecting. Thank you, Edward. Sorry, Jonathan, we passed the question to Edward. Edward, thanks so much to be here.
Yeah, thank you both for having me on. It was a pleasure to speak today. Really look forward to collaborating in the future, and thanks for everyone that joined. Some really great questions, and you can see there's a lot of excitement and a lot of thought going into where we are heading. So look forward to talking with you all